Hello everyone, I hope you're okay. Let's start our analysis for gold for 4th of December 2023. Sorry, I haven't been very well, so I couldn't upload the analysis. So let's start and see what's happening starting with Forex Factory. We haven't got much news as far as the gold is concerned, and normally we look for USD news, which affects directly to the gold, because the pair we trade is in XAU USD. So there's no news. However, we have CHF have impacted 7:30 a.m. All these are UK times. And we've got some medium impact news in different pairs. Like Euro, we have 2 p.m., 11:30 p.m. JPY. So these are the news. Now, going to gold, see what's happening in the gold. And in fact, before gold, let's go to Dixie. Normally, Dixie and gold move in the opposite direction, but not always. So you must remember that not always. So you have to go with your technical analysis and fundamental analysis and news, and then make the decision looking at after looking the probability, not just reliably trading with the Dixie movement. So make sure you uh, do technical analysis and the first, and then apply the news data as well, or fundamental data, what is going in the market. So this is the week, this is the monthly, and you can see from monthly, it is the rejection 0.6, the golden ratio level from here, a draw Fibonacci from bottom to the top, and now weekly, similar situation, you can see the rejection here. There's a clean movement here, as you can see, and then this level is broken or retested, and then clean move and the clean movement to the downside. That's a Dixie may come down further to make a double top. However, if it rejects because of golden ratio level, uh, it looks like it's rejecting, but the rejection may not show yet until it may not until probably it will have to cross this level. This rejection probably won't be a rejection. It may come down again. So if it crosses this level, the next level will be this. Then this might be possible to come pull back to the downside again. And that's the daily chart. I'm going to the 4-hour. In 4-hour, this is a engulfing candle, and it looks like it will come up to this level here. And as I said, it's a golden ratio level, so it's possible it make double bottom, and if it rejects, then we can see the reversal to the upside. However, if with the gold prices, and that means the gold may retrace as well. So always fit your analysis and technical analysis, fundamental analysis. Sorry, with the probability of the market. So now let's go to gold, see what's happening in the gold. This is monthly chart, and you can see in the month. If we take this as a one leg, then this is the golden ratio level. And that's it monthly. So 1850 to 17, around 1850 to 1800 level. That's, however, going to weekly, if we take this as a one leg, then this is the level here, around 19 or 1940 level. And there's another level, 19, around 1900 level. So they're always in big time frame, they're always 50 to 100 pips difference, especially weekly, monthly. And daily levels could be 30 to 40 pips to up to 50 pips. And four hour would be up to 30, 40 pips as well. So market doesn't always move from pinpoint. You have to draw, go into smaller time frame when taking the entry. This is the scenario in weekly, but let's go in daily. But in daily, in fact, because the market has reached this level, the all-time high, almost reached, because the market closed. It's possible that could go back to the upside further, but now taking few levels from here, we have this level, 2000 level. That's a good level as well. Onwards, and we got 2020 level. That's a good level as well. When you take entry, always consider, give priority to good levels along with the good confirmation. Then you can take it longer term trade. So this level here. One, two, three. Let me move all these lines. He's making a mess here. So we got 1, 2, 3, 4, and this level here, roughly 1985, and this level. So this is in fact, this is a zone, because also it coincides with this area here. So this zone is very important. 2000 to 1985, almost. But we can't just take a trade from here unless we have a good confirmation. Then we can take a buy trade here. For longer term, we may have to have a 4-hour daily confirmation to sit here on a buy trade. However, if this area is broken in weekly or daily, then we can kind of look for further trade, further this target. And in smaller time frame, we can always refine our entries. Where the gold is standing right now, it's possible that it breaks this to some level, whatever level. I will go in a bit for that level as well, how to find that level. So then retrace back, retest it, and then we can look for the buy trade. At the moment, buy trade can be very risky. Look in 1 hour. Let's go 4 hour first. In 4 hour, you can see that there's a very tiny movement here, and looks like evening star. And in 1 hour, and even a 30 minutes, you can see double top here as well. So at the moment, we can't say anything because the market is very bullish, especially if it breaks this level 2065. Then is a possibility to move to this level 2050, around 2050 and downwards. So be very careful when you take a buy trade, especially unless you have a confirmation, a good confirmation. If the market comes to here, then maybe a good sign to buy on the confirmation. However, just buying from here can be very risky, even in smaller time frame. Let's see what's happening. But if you want to see the probability, you can always combine the news data and the Dixie as well, provided Dixie have the opposite movement to the gold. So just be careful whatever you do. And how we can predict the next move? Taking this as a one leg. Next move to the upside. And we can always get our fib levels. Right. So just playing with the Fibonacci, you can find the upper levels here. These are the upper levels. So I hope this is helpful. And now let me remove these levels. Just remove this, and we don't need these levels now. So I hope this is useful to guys, and this is how you predict the upper level because there's no historical data here. And now let me remove this, and we got a blank chart here now. Another way of looking at it is to, you can put this, if you consider one clean move, we can then we can, there's a different ways of putting the Fibonacci. The best thing is to get a confirmation, not just rely on the Fibonacci. So that's why you need confirmation. You need candlestick pattern confirmation or RSI or whatever you use normally. If you know market structure, and then you basically need confirmation. You can't just rely on Fibonacci levels. So this is another way of putting it. And if you see, this level is very around 19. If you put even this way, this level is coming up as from 1950 level around roughly. And then we got 19. So basically in this area, you're looking for a confirmation. This is a fall zone. So this is how you use Fibonacci. This is more than one way to use Fibonacci. Just want to emphasize that don't be just stick that, oh, this is the only way. Of Fibonacci can be used in a different way. Whatever you have to do, make sure you look for confirmation and manage your risk. Risk management is the most important. One single important thing after technical analysis, mastery of technical analysis is the risk management. So risk management is very, very important. I will put another video soon about what is important and what mistakes traders do. What is more important for them. I hope this is helpful, and thank you very much. Have a good day. Good night. Bye bye.